Uncertainty is growing over the world economy because of possible interest rate hikes in the US and because of China turbulences on the markets. That's what I will be talking about with Stefan Schneider from Deutsche Bank Research. Mr. Schneider, are you worried about the current situation on the global markets?
Yes, of course, one has to be worried if we look at financial markets and the uncertainties which are basically coming from China. We have seen a almost 40% slump in the equity market there, and this has knock-on effects. We have seen the currency depreciation so far only 3%, but most likely we will see more to come in the next quarters, and all this weighs on the global economy, of course.
What does the DBIX tell us about the global growth?
It's partly reflected in the DBIX already. It inched lower by another 1/10 of a percentage point to 0.3, which is basically the low level we saw in spring this year. So the improvement during summer is basically gone. If you try to translate that into GDP growth, it's probably equivalent of something like around 3%.
We have seen a devaluation in China, a plunge in the stock markets, and this also has effects on the emerging markets. What do you think, which have been affected the most?
Yeah, of course, first of all, there is the uncertainty about Chinese growth, and China is a very important importer from products from other emerging markets. And then, of course, China is also an important competitor. So if the devaluation gives China an improvement in their price competitiveness, that's felt in other markets. So we see the biggest impact in those emerging markets which either have strong trade links or are strong competitors with China. We also see effects on countries where the currency is in a delicate situation, which is who need basically capital imports like Turkey. And last but not least, commodity exporters like Chile are also seeing the impact of weaker growth from China.
So in this situation, the Fed is thinking about raising the interest rate. What do we think? Is it a good idea? Which impact will it have?
Oh, this is the discussion which has been with the markets for the last 3 months, basically on a daily basis. I think there are several aspects. From the domestic side in the US economy, if you look at the labor market, if you look at GDP, which has been revised up strongly to 3.7% in the second quarter, you might argue that zero interest rates are no longer required. Of course, we have the gyrations in global financial markets. We have the question marks about China. And so from a more external side, you might argue that there's already so much uncertainty that the Federal Reserve should wait. But you could also make the point that if after they have basically prepared the market, they now withdraw and postpone, that might actually add to uncertainty. So it's at the end of the day, it's almost a game of psychology, and it really depends, whatever decision the Fed is going to take, how it communicates that to the market.
Thank you so far, Mr. Schneider.
You're welcome.
In our focus interview this month, we will be talking about refugees coming to Europe. It's a challenge, but also a chance. You can watch the interview on dw.com/English/Made in Germany.